Apple missed on iPhone sales expectations. With the exception of Nvidia, broader tech isn't much worse to the wear, though. And listen to this data from BCA Research. For the first time in 50 years, U.S. tech stocks comprise more of global stock market cap than the entirety of European ones. Here now to discuss is Tom Lean, head of research at Fundstrat and CIO of Fundstrat Capital. He's also a CNBC contributor. Daniel Newman is also with us. He's the CEO of the Futurum Group. Tom, let's kind of start with the earnings piece of this. What did we learn this week?
Well, we've learned that a lot of stocks have moved post-earnings, not because of whether they missed or beat expectations, but really what was sort of priced in. I don't think it was just Apple, but it was also Tesla. These are two companies that have really strong moats. I think there was a lot of fears that they'd disappoint, but these results were actually even below expectations, but the stocks rallied. I actually just think this is a sign of a healthy market as well.
Are there any individual names you'd worry about, like a Microsoft, which to our earlier guest point hasn't gone, it had a strong January a year ago, and it's only up 5% since then?
For the Mag 7, when you look at the long-term price histories and you take stocks even like Amazon, there are many years where they are range-bound, and then they break above a range. I think in the case of Microsoft, if the stock has been range-bound for 12 months, I don't think it's actually marking a big rounded top. I think to me it's probably an example of where markets maybe have been too enthusiastic a year ago, but that does give investors an opportunity because the business continues to do well.
Daniel, what did you think we learned from earnings this week?
Yeah, I think there was two big factors, Kelly. It's good to see you. The DeepSeek situation changed the entire trajectory and showed a fragility around this moat in training and how strong the NVIDIA narrative is, but it also was actually incredibly bullish. The understanding of how the diffusion and basically the efficiencies that could come with inference and with scaling laws showed that these companies like Microsoft, Amazon, they have huge upsides. And then, of course, the Salesforces and ServiceNows, because training isn't the workload. We think inference is 20 times or more a larger opportunity than training. And we actually saw this week that if we could bring those costs down, there's a ton of upside. So the earnings everyone was looking is where's the AI ROI? That will be the focus of 2025.
Tom, I don't know if you heard our segment on NVIDIA. You don't need to comment on NVIDIA necessarily, but can you tell us how important is NVIDIA to the macro stock market?
Well, NVIDIA is the leading company in the story of AI, so it is a very important franchise. It's a company that the actual lead in terms of developing the best chips continues to be far ahead of anyone else. If there is a change and a fork in the way AI moves forward or the focus becomes more on applications, I don't think it makes NVIDIA any less important, but it does create more upside. AI is a sort of a multi-decade story, and I'm sure there's going to be many story threads throughout that. So I think that the sell-off on Monday was a panic for NVIDIA, but we had highlighted to our clients that it was the 9th worst single-day decline. But the 3 times NVIDIA declined worse when we were not in a broad market, bear market, that was a bottom tick for NVIDIA. And I think that was probably the case Monday.